Is uh, let us talk about zone. As I promised you guys today, I'm gonna record a video about the zone and how you need to react to the zone. So there is a time frame that you need to look for you to be able to identify your zone and on which time you need to react for you to be able to take your entry. Let's say example. Let me write for you guys here. Let's say example, you get your zone. Zone is what we call supplier or demand level. So let's say you get your zone in a weekly. How are you gonna look at your trade for you to be able to take your trade? So you need to go to H4. So you can find your zone in weekly, then you see the reaction. So zone on weekly and the reaction, H4 reaction at your zone, that the one that you found in weekly. Then when you go to, let's say, to H1, example, if you find the zone in H4, that is your zone, your demand or supplier level, then how do you take your trade? You need to monitor that zone on M15. So that is the reaction on M15. So this is how you need to look. Let's say you found the daily reaction have to be in H1. You see the reaction at the zone in H1. H1, you have to monitor your zone on M5. It's so simple, just a straight logic. But the only issue that we have in today is that so many people, they'll take different charts. The same person is looking, let's say he found the zone on H1. Example H1, you go on M5, M15, M3, M1. Second, what are you looking? If you know what you're doing, what are you looking on all those time frame? You just have to build your confidence and you know, okay, if I get a zone, then this is where I'm gonna look. And there is some pattern that we look before we take a trade inside those zone. How is the market reacting and how is the market going to my zone? This is how we have, let's say, example, the first one we can say we have equal lows and equal highs. I'm gonna draw it for you guys. Let's say we have compression, the one we call CPLQ. We have 3D. Maybe sometimes we have Wyckoff before market reverse. You see, and inside those zone also we have what we call the low resistance liquidity run or the higher resistance liquidity run. So all those things we need to look at them. So let me draw for you guys because the higher and the low resistance liquidity I've already write them already. So in this case, the first one that I'm gonna look at, let's say this is my zone. How am I gonna take a trade at my zone there? Remember, sometimes in higher time frame, you're not gonna see maybe market give you something like that on higher time frame. So what are you gonna look now to see these things? You're going to look at them on the small time frame. Let's say low time frame. Let's say you found the zone on H4, then you look at M15 to see how is the price approaching your zone. Example, this is the what do you call, this is the 3D toward my zone. Then what I'm gonna see is market create this area, then break. So I know already when market is delaying going to the upside. So what I'm gonna do is that at my last level, I'm gonna take a higher risk. This is what we call a higher risk trade. Then I'm gonna take that. If market breaks structure from here, then return again, then I'm gonna refine my entry. Here I'm gonna use the QML. You see, we have a QML here. Or what you're gonna see, market maybe is gonna come and create something like double top. Then I'm gonna wait for market to do something like this inside the zone for them to drop, or market is gonna give me this low resistance liquidity run. You see, so market failed to take out this high but react to this level Then I'm gonna take my entry. But taking the entry on this level here, how do you take your entry? This is also another question. Maybe I'm just gonna do it on another video. So you need to understand the specific method of you approaching from this area. What is gonna be a signal to show you that market is gonna sell from here? You see those kind of stuff. Again, also from here, how do you know that market is gonna do the same thing? And this is the higher resistance liquidity run. So people, they call it, no, this is a stop and market grab liquidity and drop, whatever name they call it, it's fine. But some people, they call this is a M, this is a W, whatever. So if you have the same pattern like this, you're gonna have the same one when you wanna buy. Let's say you have something like this, you see, then this is when you're gonna buy. You need to make sure to buy here or to wait for market to run this one, return and continuation. And another one is market has to do something like this, create, return, fail. Then this is what sometimes people, they call it a shift in the market structure, because this higher low failed to break the lower low here, then create a higher low for them to go to the upside. So you need to pay attention to all this. Now come to the zone. Let's say this is my zone. I found this zone is on a what do you call H1 zone. This is my H1 zone, where I have my bullish candlestick, then I have this small bearish inside. I know some people, there's nothing wrong on drawing your zone as long as you understand what you are doing. It's okay, because some people, they'll say, okay, this is my last buy before market sell, so my zone is gonna be at this area. Depend on what you believe, because sometimes market is just gonna get here and sell. But for me, I would rather wait for market to come inside here. What is gonna be the confluence of me waiting for market to be there? Because sometimes on this area, I'm gonna have the hidden base. The hidden base is gonna be here in between, or market is just gonna seek that last, the first sell, like the measure zone, because this is the measure zone where I'm expecting market to come back, so that I can do what I can sell from there. Then one thing I need to see is that there is these things that I call you the PA. So it's either I see market give me something like this, create liquidity, run liquidity, then drop. So I want to see this, or what I want to see is market give me something like this. There is no momentum for market going to the upside, then I'll know this is the 1, 2, 3. This is what we call a 3D. Or what I want to see, maybe something like this. So I have a compression, loss of momentum going to the upside. Market is taking time for it to get to where I want. Then when I find a zone like this on weekly, then I need to shift to H4. Let's say this is H4, this area is H4. Inside this zone, this is H4. So I want to see H4 give me something like this. And you're going to see either here we're going to have a decision point, or market is going to run the low, the high, to come and react to a certain level. Maybe let's say somewhere here, run this level they created, because most of the people, when they see a zone, why do market create this? Market create this because there always be people that they always rush. When they see a zone, they start placing sell, 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 sell. So they sell. Then this movement always happen. So if it failed to take out everyone, maybe it's gonna react from this area and go the downside. Or market is gonna do, market has to break everyone, take out everyone that is in the market. So the scenario is like this. We have a zone. This is our zone. Market get at the zone first, everyone jumping on the sell. People sell, 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 sell. Next minute market return, and people, they still believe market is gonna go the downside. Then market gets close above where people have been selling, then sell again huge. You see this movement. So you just need to understand price. This is why you have to look at all this pattern for you to take a trade, because one always be a stop and they always come back to run that area for them to do it, to go on where on the other side of the market. So you just need oh la la, where is it again? So you just need to do what, to pay attention to whatever you are doing and how you are approaching your price. You see this kind of stuff. Let me do something like this. Okay, What is this? Oh, why is not going there? Okay, so then when we have the H4 zone, this is our H4 zone. So we want to see the reaction inside the H4 zone. How is the market going to our H4? Let's say market get there, sell, then market always make a return. Sometimes people, they see, they react to this area straight, or they wait for market to run the eye, then refine their entry on top there. Again, you find the H4 zone inside weekly zone. You want to trade the reaction. You're not going to take your trade on H4. So you need to refine again your entry on M15. As I explained on the beginning, you have H4 zone, a weekly zone. Do you see the reaction on H4? Then H4 gets on a weekly zone, sell from here for the first time, then return. When he's returning, your job as a trader is to see the reaction on M15 on this zone here. What is M15 telling you? This is when you're gonna react to. Sometimes people, they'll do what they'll do. They say, okay, let me go to M5. Maybe I need to reduce my stop loss to be 2 pips, whatever. It depends on how confident you are in the market. Then from here, this is why you're gonna do what? You're gonna take your trade. Your M15 zone now become like this. What I wanna see on M15 before I take a trade, I wanna see that momentum telling me that I'm gonna sell. I wanna see this. This is what I wanna see. I wanna see this, or I wanna see 3D happen here for me to understand that market is going to sell and it's going my way. You see, guys. So I'm gonna show you one chart. This is just a quick video, and there is a lot of information. I hope you're gonna pick them properly. And what I wanna show you V75, because I shared this trade before I take my time off from the chart. I share it on the group. Then today I was checking at it. I see the way it play nicely. Then I say, no, why not telling people the whole idea behind this trade? Because I send the chart, I never explain why I was expecting a sell from this zone. So this is why today I want to show you guys why I was expecting the sell from the zone where I was expecting. So first I'm gonna show you guys the picture. What is those picture? I think I need to show you guys first the picture so that you see that we are not making up a story. Okay, the pictures is here. This is the first picture. Do you see the picture? I took it from my phone. Then you understand there is 1 point and the second one. But if you check properly, what you're gonna see, we have these things. People, they sell here for the first time, market come down, return there. Then from here we could find our entry. If you want, we can take our entry with other confluence that we use in the market. Try to understand how I'm gonna take my entry. Then you take your first entry. And the second entry, I was expecting it to here. Do you see I even write there 2, number 2, because I was expecting for market to come back on this zone so that I can be able to do it, to take the entry from there. That was so cool. And check what happened next. And this is what happened. Market come back to my zone. You're gonna ask yourself a question. How did I know that market has to come there? You see, it's just by my confidence and from what I'm applying, how I see the market. This is how I was able to understand that market is gonna go where? Market is gonna come back to that area. And if you check again here, how do you see? Let me look for something to draw here. Maybe this one, I'm sure. Okay, just bear with me. I don't know if I'm drawing properly. Okay, so if you check here properly, what do you see? I have my zone. This is my zone. Then when I refine this entry, when I give this zone on the beginning, market was down. Do you see? I was expecting market to react first to this zone, and my entry number 2 must be on top. Why did I expect market to come here and react? Because this is where we have, some people they call it SR flip, other they call it mitigation block, SNR1, whatever name they give it is the same story. It's just rebrand after rebrand. Now, how do I sell on top? I wanna see how market is losing momentum, going to the upside. Check the way market drop from here to this area. Do you see how market take almost first time to come here. It was very fast movement. But check the way market went to the upside. It was crazy. Market push like like a snake. It's just going slowly, 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 slowly until we get to this area. But as long as I have my zone defined already, I understand where market is going to react. This is where market react from there. So now let me go to the chart. Then I'm gonna mark everything for you guys. How do I put the screen a bit big? I don't even know how I need to put this screen big. But if you can check, this is the way all the concept was and how we need to take the entry and how I was looking at the market. All the stuff are just here. Now I think I need the blank chart. Let me first show you on M30 so that you see what was happening on M30. I'll come back again to this chart, guys, don't worry. Okay, check now on do you see this is our market compress, adding more sell orders, entry 2. This is entry number 2. You see entry number 2, entry number 1, number 2, then you add more sell in. So how do you calculate your momentum? You check how market was coming to the downside and how market was going to the upside. So you calculate the candlestick. By looking with just your open eyes, you're gonna see that market only take almost like maybe 7 candlesticks to go to the downside. But it took forever for it to go to the upside. So you know already, okay, there is a problem here. Let's see. It takes almost 9 candlesticks to come to the downside. Now check how many candlesticks going to the upside. You see 47 candlesticks going to the upside. So you a trader, what do you think? Zone is going to hold. Now let me open a new chart. Where is it? V75. Okay, it's here. So let me open a new chart. Okay, this is V75. Now, what I normally do, I wanna try to identify my zone. This is weekly chart. Then I select my zone. This is my zone. When this candlestick touch there, when it's going, I define my zone. This is my zone. So now I'm expecting market to react to my zone. I told you guys, when I see a zone like this, what am I gonna do? I have to move to H4. I go to H4. What do I see on H4? Do you guys what I see on H4? Market create this pattern, the one I draw there on the beginning. Market touch my zone for the first time, sell. Now this area here become my other zone, where I have to see how market is going to react if market come back there, and we call it a supplier zone. Now check what happened. Market return again back to my zone. So what I want to see now, because this is H4, I know I have a zone, this zone. Let me try to do something like this. I don't know if he's gonna accept, but anyway, it's okay. So this is my H4 zone. You see where my H4 zone start? Let me mark again. This is my H4 zone. This one here is my H4 zone. So now I wanna sell inside my H4 zone. What am I gonna do? I have to go to M15. Now I go to M15 to try and see what is happening inside my zone. On that zone I found on H4. So I want to see what is going to happen inside my zone. What is the confluence that I have there to show me that market is going to do what? It's going to sell. First thing that I saw there is a break of structure. Market break the low. Another thing is loss of momentum. Market is going to the upside. One of the PA that I normally look for me to take an entry. Here there was a swipe. What you call a swipe, like mitigation, whatever is here, or SR flip, whatever is there. So I have all this confluence for me. Then it's telling me that market is going to do what? It's going to react at my zone. You know normally how I take my zone. As I mark my zone, where is my last price? Here. My last zone is this one. This is my last level. That candlestick, the one that is there, that is my zone. Do you see the first time when market gets here, market react to this level and drop. Now I'm gonna wait for the second time to see if market is going to react here or market is going to run. Then we run this area. So when we run the area there, do you see what we create here to get as a confirmation? Another zone inside my zone. Do you see this zone here? This one can be my entry. I'm gonna focus here just to be my entry. Then I'm gonna take the entry here on this candlestick. This is how I'll take my entry, and my stop loss above the eye. This eye, then my stop loss is there for the safety, because sometimes you're gonna put a tight stop loss, either spread just kick you out, then market goes your way. Then if you want again to have a confirmation entry to know that market is going now, do you see how they break this momentum line? We call it a momentum line or a compression because market was coming and bounced from this area and buy. Now here we have a clean push, market to break it. Some people, what they do, they wait for market to do it, to return back to this area so they can take the entry from here. Then for them, they know, okay, this is the proper confirmation. Then I'm gonna take a sell from here to go to the upside. Then how do you add more sell on the way market is going? Because if I have my first entry, let's say here, then my second entry is here, so I need to keep on adding orders. This is how you need to add your order. You put your adding more sell there. Yeah, there you can even put maybe 20 position, because that is the proper confirmation. Because when you see like this, you know already what is going to happen next. And if you wanted, let's say, to add more entry here, you could do something like this. Open off that candlestick, ident base is there, key level, take the entry, go to the to the downside. You see. Then here again, let me go to H1. Here again, what do you see? We have this candlestick here. We know this is a demand level. Market has to come and react with demand level. But when you have a clean break, they wipe your zone like that. What do you have in your mind? That market has to return back to trade inside this area. This is why you need to refine another entry. You just take your entry again from here. You place another entry for a continuation. Then, where is your target? When you are selling face here, your first target must be here. Maybe even 30% of your profit must go out from this low. When we break this low, 30% of your profit, your position must go out. Then you can hold 70%. Again, when they take out this, you can take another 20, because there is no warranty of saying market is gonna go again to the upside or market is gonna continue going to the downside. So you need to play safe. Then market break. What do I see here? If you go to H2, then what you're gonna see here, you see there is what we call inefficiency that was here. The inefficiency price was there. So when you see the inefficiency market, after market give you break of structure, then the market starts consolidating again here. Market give you another compression going to the upside. You see, loss of momentum to pull to the upside. So what is the price that is next to you? Inefficiency is there. Then I place my entry here on the inefficiency. We come again to the downside, we break this one. But where is the last zone that lead you to a break of structure? This is the last candlestick that lead to a break of structure. Markets return again back there inside my zone. Then I'm taking what? A sell position again. I can add a sell position again here. Then I go to the downside. We break again this area. We return again back to the upside. What do you have? My zone again. My zone. Market return inside the zone. I then base this area. Market return. Then we sell again. You see how it could just keep on adding entries. But how do you get the direction now? The direction always be on the higher time frame. This is when you understand. Because if we are selling from here, where do you expect market to go? You're expecting market to drop and take out. If market is not respecting this level here as your zone, then what are you gonna wait for? Is for market to come and run this low. So when market run this low, because on weekly, you know your direction bias on weekly. Let me go to this side. You know weekly that weekly is doing what? Is selling. You see, weekly is selling. So maybe the targets that you're gonna put, okay, as your target, this is the last level where market bought. Let's say here where market bought for the last time. So, and also remember this one can act like can act like a liquidity. This area here can be like a liquidity. Either they run this one as a liquidity if they are selling more. So you need to monitor when a zone market get your zone on the low time frame. Try and understand. Let's say H4 whatever, because also this one we have a clean price. You see this area after this break of structure, after we break this eye, this is weekly. You see, guys. So yeah, so this is what I wanted to show you with you guys. I hope you're gonna watch this video and enjoy it.